Your job becomes your only financial plan when your entire life depends on one paycheck, one employer, one manager, and one version of your career continuing exactly as it is. And that sounds normal, because most people are taught to find a good job, keep the job, and build life around the income. But personal finance becomes dangerous when your paycheck is the only wall standing between you and panic. If your rent depends on one paycheck, your savings depend on one paycheck, your health insurance depends on one employer, your confidence depends on one job title, and your future depends on one company not changing its mind, then you are not as stable as you think. You may be employed. You may be responsible. You may even be doing better than most people around you. But if one company decision can change your entire financial life, you are not financially free yet. You are financially fragile. The numbers say this is becoming a normal condition now, not the exception. In January of 2024, the Bureau of Labor Statistics reported that the median American wage and salary worker had been with their current employer for only 3.9 years, the lowest since 2002. The World Economic Forum's 2025 Future of Jobs report found that employers expect 39% of workers' core skills to change by 2030. And in the Federal Reserve's 2025 Household Survey, 42% of adults said finding or keeping a job was a minor or major concern, up from 37% the year before. So this is not just a story about one man being anxious at work. This is a story about a world where jobs change faster than many people's financial plans do. Today, we are going to follow one ordinary life. Not a millionaire, not someone reckless, just Theo, a 29-year-old man with a good job, a decent salary, and a life that looks safe from the outside. Until one quiet meeting at work shows him that job security is not the same thing as financial freedom. At 29, Theo believes he is doing the responsible thing. He has a stable job, a decent salary, health insurance, a retirement account, and a calendar full of meetings that make his life feel structured. He works as an operations analyst at a mid-sized company. It is not his dream job, but it is respectable. It pays well enough. It gives him a title. It gives him routine. And most importantly, it gives him a paycheck every 2 weeks. Theo earns about $6,200 a month after tax. Not rich, but enough to feel like adulthood is working. Every month, rent gets paid, the car payment clears, groceries get bought. His phone bill is automatic. His subscriptions renew without him thinking about them. A small amount goes into his 401k. A small amount goes into savings. Nothing looks broken. And because nothing is visibly broken, Theo assumes the system is healthy. That is the first illusion. A paycheck that arrives on time can make a fragile life feel stable. Because when money comes in consistently, you stop asking what would happen if it stopped. You do not notice that almost every important part of your life is attached to the same source. Your rent, your insurance, your savings, your future plans, your confidence, and sometimes even your identity are all quietly tied to one employer. And as long as the paycheck keeps arriving, that does not feel like a problem. It feels like success. When Theo's friends ask how work is going, he says, "Good." When his family asks if the job is stable, he says, "Yeah, I think so." When he looks at his banking app, nothing seems urgent. His account is not empty. His credit card is not out of control. His life looks like the life of a person who is doing fine. But there is a difference between doing fine and being protected. Theo has income. but he does not have enough options. His emergency fund is about $4,800, which sounds okay until he compares it to the actual cost of his life. Rent, food, insurance, car payment, phone, subscriptions, minimum debt payments, and normal living costs bring his monthly baseline close to $4,900. That means Theo has roughly 1 month of safety, maybe a little more if he cuts everything fast, maybe a little less if something else goes wrong at the same time. But in reality, his entire life has about 1 month of financial oxygen. And he is not unusual. In that same Federal Reserve survey, only 63% of adults said they could cover a surprise $400 expense with cash, which means a huge share of working people are 1 bad month away from borrowing. The strange part is that Theo does not feel like a man with 1 month of safety. He feels like a man with a career. That is the paycheck illusion. A steady income can make you feel protected, even when you are not actually protected. It can hide the fact that your entire life depends on a system you do not control. You do not control the economy. You do not control the company's revenue. You do not control whether your manager leaves, whether your team gets reorganized, whether your role gets automated, or whether your department still matters 2 years from now. You control your skills. You control your savings rate. You control your network. You control how many options you are building outside the company. But Theo has not been building options. He has been building routines. Every morning, he wakes up, checks his phone, answers messages, opens his laptop, joins meetings, finishes tasks, and tells himself this is what responsible adulthood looks like. And in many ways, it is responsible. There is dignity in work. There is nothing wrong with having a job. A good job can change a life. But a good job becomes dangerous when it is the only plan. Because if your entire financial strategy is, I hope the paycheck keeps coming, then your plan is not a plan. It is a hope with direct deposit. And that hope can feel safe for years. It can feel so safe that you stop preparing. You stop updating your resume. You stop learning skills outside the job description. You stop meeting people outside your company. You tell yourself you are being loyal. But sometimes what you are really doing is becoming dependent. The most dangerous part is that dependence does not announce itself. It does not feel dramatic. It feels normal. And then, one ordinary Tuesday, the routine cracks. It starts with a calendar invite. No details. Just a company-wide meeting at 9 a.m. Theo joins like everyone else. Camera off, coffee on the desk, Slack open in another tab. At first, the language sounds corporate enough to ignore. Strategic realignment, operational efficiency, cost discipline, role consolidation. Nobody says panic. Nobody says layoffs. Nobody says your life may change today. But everyone understands what the words mean. The company is changing. And the strange part is that nothing has happened to Theo yet. His laptop still works. His badge still works. His salary still exists. His calendar still has meetings. But something inside him moves. For the first time, he sees his paycheck from the outside, not as a promise, as a decision someone else gets to make again and again. And that realization feels heavier than he expected. Because the job that felt like his foundation is actually something the company can reprice, restructure, move, merge, or remove without asking how his rent is going to be paid. That is not evil. That is business. But it is a dangerous thing to forget. A job can feel deeply personal to you while being just a line item to the company. To Theo, the job is rent, insurance, groceries, savings, identity, routine, pride, and proof that he is doing okay. To the company, the job is a role, a cost, a function, and a decision. That gap is where financial fragility lives. That night, Theo opens his banking app, not because he is broke, but because he finally wants to know how fragile he really is. He runs a simple test. If my paycheck stopped for 90 days, what happens? At first, he thinks the answer will be fine. Not great, but fine. He has experience. He has a resume. He has a degree. He has references. He is not starting from zero. Then he opens the numbers. Emergency fund, $4,800. Monthly baseline, around $4,900. That means 1 month. 1 month before the pressure becomes serious. 1 month before he starts making decisions from fear. 1 month before he may have to put expenses on a credit card, borrow from family, sell investments at a bad time, or take the first job he can get instead of the right job. And that is when Theo understands something most people learn too late. An emergency fund is not just money. It is time. 1 month of expenses is 1 month of time. 3 months of expenses is 3 months of time. 6 months of expenses is 6 months where you can think clearly instead of making decisions from panic. Theo does not only need more savings, he needs more runway. Because the real danger of losing a job is not just the lost income. It is the speed at which fear starts making decisions for you. When you only have 1 month of safety, you cannot interview calmly. You cannot negotiate with confidence. You cannot reject a bad offer easily. You cannot wait for the right opportunity. You do not choose from strength. You choose from survival. And survival is expensive. It makes you accept less. It makes you rush. It makes you borrow. It makes you shrink your standards just to stop the bleeding. This is why personal finance is not only about growing wealth, it is about buying enough time to stay rational when life changes. A bigger emergency fund does not just protect a bank account. It protects your judgment. It protects your ability to pause, to say no to a bad offer, a toxic manager, or a job that would solve the short-term panic while trapping you in a worse long-term life. That is why runway matters. It turns panic into options. It turns "I need anything now" into "I can choose carefully." But the deeper problem is not just Theo's emergency fund. It is that his skills, confidence, and identity have also become dependent on one company. The paycheck pays Theo's bills, but the title does something more subtle. It tells him who he is. When people ask what he does, he has an answer. When family asks how work is going, he sounds successful. When old friends check in, he can say, "Things are good." The job gives him a structure, a title, a calendar, and a reason to feel like life is moving forward. And that is where the trap deepens. Because if your job becomes your identity, then job risk becomes identity risk. A layoff is no longer just income loss. It becomes a question of who you are without the company, without the title, without the role that made you feel useful. This is why some people stay in jobs they hate for years. Not only because they need the money, but because leaving would force them to meet themselves without the title. Theo realizes that he has not just outsourced his income to one employer. He has outsourced part of his self-worth. And that makes the job feel even more powerful than it already is. It does not just pay him, it validates him. It gives him a place to go, people to respond to, and problems to solve. Without it, he does not just fear being broke, he fears being nobody. That is money psychology. The financial risk is losing income. The emotional risk is losing the version of yourself that income helped create. So the solution can not only be finding another job. The solution has to be building a life with more than one source of confidence. Theo starts with a new idea, A cash emergency fund protects your time, but a skill emergency fund protects your earning power. And earning power matters because the job market is changing faster than most people want to admit. When employers expect roughly 39% of workers' core skills to change by the end of the decade, the safest person is not the one with the most comfortable routine. It is the person who keeps becoming useful. So Theo stops asking, "Is my job safe?" He starts asking, "Am I employable outside this job?" That question changes everything. He lists the skills his current company uses him for. Then he lists the skills the market would actually pay for. The gap between those two lists becomes his new financial plan. Not a dream, not a fantasy business, a defense system. Every week, he spends 5 hours building skills that belong to him, not the company. Data analysis, communication, AI tools, project leadership, automation, client writing. Whatever fits his career path, he builds it with proof. Because a skill you cannot show is weaker than a skill you can prove. At first, this feels awkward. After work, Theo is tired. The last thing he wants to do is study, build, write, document, or practice. Part of him wants to believe the company will be fine. Part of him wants to relax and forget the meeting ever happened. But another part of him knows the truth now. The paycheck is useful, but it is not permanent. The job is valuable, but it is not guaranteed. The title is real, but it is not his identity. And if he wants financial freedom, he cannot wait until the emergency to start building the exit doors. So he starts small. 1 hour before work, twice a week. A few hours on Saturday morning. One project at a time. No dramatic life overhaul. No fake hustle culture. Just quiet, consistent work on skills that travel with him. Because the company owns the role, but Theo owns the skill. And once he understands that, work begins to feel different. His job is no longer the whole plan. It becomes one part of the plan. It funds the plan. It trains him. It gives him experience. But it no longer gets to be the only thing protecting his future. Then Theo realizes that skills matter, but invisible skills do not create opportunities unless people know they exist. Inside the company, people may know he is useful. Outside the company, he is just another resume. So he starts building proof. Not fake personal branding, not motivational posting, real proof. He takes projects he has worked on and turns them into simple case studies without revealing private company data. He writes what the problem was, what he did, and what skill it proves. He updates his resume while he still has a job, because the worst time to update a resume is the week you are panicking. He reconnects with people before he needs them, one message at a time. No begging, no desperation, just relationships. He takes one small freelance project, not because he wants to quit tomorrow, but because he wants to know whether the market will pay him without his company in the middle. The first project is small, almost embarrassing, only $600. But psychologically, it feels much bigger, because it proves that his income is not trapped inside one building. And that $600 changes something in Theo. Not because it makes him rich. It does not. It will not pay his rent. It will not replace his salary. It will not turn him into a millionaire. But it proves a concept. It proves that his skills have value outside the company, that his usefulness is not limited to one job title, that income can come from more than one door. For the first time, Theo feels a little less owned by the paycheck. He does not suddenly hate his job. In fact, he becomes more grateful for it, because now he sees it clearly. It is not a prison. It is not a permanent identity. It is a tool, a powerful tool that can fund savings, build skills, and create leverage, as long as he does not mistake the tool for the entire plan. That small freelance project does not make him free, but it makes freedom feel less theoretical. And once even a small amount of income comes from outside the company, fear starts to change shape. Over the next 12 months, Theo's life does not become flashy. It becomes stronger. His emergency fund grows from 1 month to 3 months. His fixed expenses come down slightly, not because he becomes cheap, but because he wants more runway. He keeps investing. He builds skills. He talks to people in his industry before he needs a job. He experiments with small income outside the company. He updates his resume before there is a crisis. He starts treating his career like something he owns, not something the company controls. Nothing about this looks dramatic online, but inside his life, everything feels different, because fear has less leverage over him. If his manager changes, he does not panic the same way. If the company announces another restructuring, it still matters, but it no longer feels like the end of his life. If he gets a recruiter message, he has something ready. If he wants to leave, he can plan instead of fantasize. If he stays because it makes sense, not because he has no other choice. This is the option gap, the distance between what you need and what you can survive. The wider that gap becomes, the freer you are. And this is where Theo finally understands what he had confused for years. He thought financial freedom meant having enough money to stop working forever. And for some people, eventually, it does mean that. But the first layer of financial freedom is much closer than that. It begins when one company decision can no longer control your entire nervous system. It begins when a meeting invite does not make your stomach drop because you know you have runway. It begins when a layoff would hurt, but not destroy you. It begins when your skills, savings, network, and proof give you options before you are desperate. The real lesson is not that jobs are bad. A good job can change your life. A good job can fund your investments, pay your bills, build your skills, and give you structure. The mistake is not having a job. The mistake is letting one job become the entire plan. Because companies can change faster than your bills disappear. A manager can leave. A team can shrink. A role can be automated. A department can be merged. A budget can disappear. And when that happens, the question is not whether you were loyal. The question is whether you built options while things were still good. That is what Theo finally understands. Your paycheck is income. Your emergency fund is time. Your skills are earning power. Your network is access. Your proof is credibility. And your identity outside your job is emotional freedom. Financial freedom is not just having enough money to stop working forever. Sometimes financial freedom begins when one company decision can no longer decide how safe you feel inside your own life. A year later, Theo still has a job. That is important. He did not quit dramatically. He did not become a millionaire from a side hustle. He did not escape the system overnight. He simply stopped letting one paycheck be the only thing holding his life together. He has more savings, more skills, more proof, more confidence, and maybe most importantly, more of himself outside the company. That is what financial maturity looks like. Not hating your job, not worshiping your job, using your job to build a life that can survive without it.
So if your entire life depends on one paycheck right now, Do not panic. Start building options while things are still calm. Build the emergency fund. Build the skill emergency fund. Build the proof stack. Build relationships before you need them, and build a life where one company decision cannot decide your entire future. Because your job can fund your freedom. But your job should never be your only financial plan. If this video made you think about your own career risk, comment one word below options. And if you want more cinematic personal finance stories about money psychology, personal finance, and financial freedom, subscribe to this channel. Because sometimes the most dangerous financial trap is not spending too much. It is depending on one paycheck for too long.